first of all, thank you for coming. My name is Monty Silver, and I'm a U.S. tax lawyer, formerly with the IRS Estate and Gift Tax Department and the U.S. Tax Court. And I now live in Israel and practice exclusively U.S. tax law. Fascinating subject. Okay, so the agenda for today is, first of all, we'll talk about the U.S. Aspects, and this will be broken down to two. Myself, more on the tax law side, and Larry, who will talk about the kind of troubling timelines and requirements on a compliance side, and then we'll have Gidon from Broidy talk about the Israeli aspect of the other side, how this impacts Americans living in Israel who are subject to Israeli tax. Because when we talk about solutions, which we will not get into today, but you cannot solve these things without looking at the American side and the Israeli side. You always have to look at both sides, because if you solve this one side, you can create a huge problem for the taxpayer on the other side. So it's very important to have both of us here today. So as I said, this whole thing has really created a turmoil in my life, and it has brought about many unexpected things. As I said, for one, all of a sudden I have newspaper, the International Tax Review, very prominent, if not the most prominent business tax journal, call me up and ask me to write something on GILTI for multinationals. So we'll start right now with the U.S. tax basics. And I'm not going to, this stuff you know. So in terms of understanding how crazy this is, you have to realize the fundamental concepts of U.S. taxation, and that we all know. A U.S. citizen, a U.S. resident, a U.S. corporation pay taxes on their worldwide income. That, of course, we all know. Green card holders usually also, unless they're living outside the United States and make some kind of election, which many times they won't do if they're long-term green card holders, because then they would face a deemed expatriation. So they don't do that. So many times they're also taxed on worldwide income. U.S. residents are subject to U.S. tax only on their U.S. source income. If I'm an Israeli corporation, which I am, not me, but I have one, and it earns only money in Israel, then conceptually, that Israeli corporation is not subject to tax in the United States. Okay, and the treaty basically just repeats these very simple concepts. 6.1, a resident, an Israeli resident, let's say individual, or a corporation of Israel may be taxed by the United States on any income from sources within the United States and only on such income. Okay? It's kind of black and white. On the other hand, despite anything else in this convention, the United States may tax its citizens as if the convention had not come into effect. Okay? That is a problem, tough one. But the conclusion is kind of clear. An Israeli corporation with no U.S. source income is not subject to U.S. tax. That's what one can understand. If you don't check the box and the corporation is a corporation and deemed a corporation, America conceptually cannot go inside that corporation and disregard it. Okay? Of course, we all know that there's an exception to the rule, and there's exceptions to exceptions, and there's exceptions to exceptions to exceptions. But what happened was that all these, back in 1962, when the CFC regime was implemented, all these corporations, previous year Googles, back then it was, who knows, IBM or I don't know, they were creating all these subsidiaries like they were doing today, and stashing money abroad via transfer pricing, licensing of, buying something from America, selling something to Ireland for cheap, or a related company, and then in Ireland, which is a low jurisdiction of tax, selling it to a third party, and all the money and gains are in Ireland. So they did this, And so the United States, back in '62, said, no, there's something, you're eroding our tax base, or whatever the words they used back then. So what they did was they created the CFC regime that said basically if an American owns, an American individual or corporation, an American person owns more than 50% of a foreign corporation, it's a CFC. Okay? So here we have Israel, here we have United States. This is an Israeli corporation. If an American living in Israel, or US persons living in Israel, owns more than 50% of this corporation, it's a CFC. If a corporation owns 50%, like Google, which owns 100% usually in its subsidiaries, that's a CFC. Okay, so I'll try to go by fast because this is kind of basic. But until December 31st, 2017, it was only if that corporation had certain kind of income, subpart F income, that the United States would look into the corporation and say, no, you have to pay what's inside the corporation. We will look inside the corporation, even though it's an Israeli corporation. If you have certain kinds of subpart F income, bad income we'll call it, then it's not, I've read many articles, it's called or tainted income or bad income. Then each person who is a 10% shareholder has to pay its share of that bad income. So the question was, is it a 50% controlled corporation? Well, my corporation is 100% owned by Monty, and I'm a U.S. corporation, so I have a controlled foreign corporation. Am I more than 10% shareholder? Yeah, I'm 100% shareholder. So that means if I had subpart F income, 100% of that income would be attributable to me, and I'd have to pay on it personally, as would Google. So this piercing of the corporation, of the Israeli corporation, is not new and may have been challenged, I'm not aware, but it's been existing and everybody accepted it because it dealt with situations of abuse where people were abusing, corporations were abusing these relationships between corporations and siphoning money off abroad. Here's what subpart F income is. This is the highest level possible. I could spend 2 seminars just on this, on any one of these, as I'm sure Larry could too. I mean, this is, but I just wanted you to understand what this subpart F was, what income was, and how very, very few of us ever had this. So subpart F didn't impact me. Therefore, I never had to pay subpart F, even though I held a CFC. It had to do with passive income, but there's high levels of minimum, there's a threshold. It had to do with sales between related parties, that I said, Google selling to their subsidiary in Ireland for cheap and then them selling it for expensive. Insurance, services for related parties. So 9, I'm sure, I don't know the numbers, but Larry, I mean, how many times would you see CFC income among your total?
Believe it or not, surprisingly, for people that don't plan properly, it can definitely happen.
With the dividends, passive income?
More so with the passive income.
Yeah.
That people keep their money in their companies and they don't distribute dividends on a regular basis. They build up the retained earnings, and,
right,
and they start investing that money.
Yeah, there you go.
Creating your more than 5% threshold income.
Right. Okay. Yeah. So once you have a decent size and start investing and having capital gains, then you're in trouble. But that doesn't happen. I mean, it happens. I'm not saying it doesn't happen. It doesn't happen much. So, but if you have this, still, how does the U.S. get to the individual shareholder? Because this is an Israeli corporation, and we said America cannot tax the Israeli corporation, but they get around with subpart F, and they say they're ignoring this, and they're saying we're not taxing the corporation, we're taxing you, the shareholder. We're basically saying we're ignoring the corporation and we're going after you. Now, you can just imagine what would happen in the United States if I'm a lawyer out of the 10 zillion lawyers in California with a corporation. And Uncle Sam comes to me and says, we're just going to ignore your corporation and tax you directly. There would be a revolution. I mean, it would be unconstitutional. it just wouldn't happen that you ignore a corporation. I mean, if we all know piercing the corporate veil in order to, to establish liability, you have to have very high standards of proof of abuse of that corporation in order to pierce a corporate veil for purposes of, let's say, slip and fall. Okay? But here, in our case, they've pierced it as if, willy-nilly. I don't know what to say. Okay, but so that really didn't impact all that many people. But as I said, the guy who came to me at first was a lawyer, just like me, sole practitioner, accountants. I mean, I want to add, you have a corporation?
I don't, but...
okay, well, how many people have how many people in the audience have corporations? Well, that's a lot of people. And how many people have clients who have corporations? Americans. Whoa. Okay, just for the video, a lot of people. So, now we're talking about not some luxury bad income that only the rich have, but we're talking about the same problem, but now the law affects us. What are we talking about? We're talking about the same problem. Google and Apple and General Motors and all these companies were siphoning and holding $4 trillion overseas. The same thing that happened in 1962 that made them elect this law. Now it's just much larger money. The government is broke. Trump wanted to pass the reform. It has to be paid somehow. And this is not, and they want to bring in money into the United States, which I think is a very noble cause. And I think that we're seeing that now that they've brought in this amount, Apple is investing. So I think conceptually, probably a good thing. So what did they do? They basically said that if we're talking about a CFC, controlled foreign corporation, but notice this, where the shareholder is a U.S. shareholder, meaning owning that same 10% that we talked about. So you have to have 50% owned by a U.S. person, and then the tainted income is attributed to the 10% shareholder. But now they said, we're not going to look at that only subpart F income. We're going to redefine subpart F to include all the accumulated profits of that corporation from 1986 to December 31st, 2017. Meaning, all the accumulated profits you had for 30 years in that corporation, Google and Monty, and all the people that raise their hands and all their clients. That is now called subpart F income for one time. Everything that happened up till from 1986 to 2017, December 30, 2017, that is accumulated profits up, and that's included in the shareholders' income. In the shareholders' income, meaning in my case, in Monty's income, and in the case of Google, in the Google US income. Okay? That's in essence what they did. So this, you can just imagine, of all the people that raise their hands and all the people who you represent, whoever has a CFC and has assets, money, who made investments, legitimate investments in apartment buildings through their corporation, who develop, take money and reinvest it, don't distribute it, but reinvest it. That money is now taxed as if it was a distribution. Now, I didn't distribute it, I can't distribute it, it's in inventory, it's in real estate, it's in whatever you want. Pay tax on that amount. Surely insane. Yeah. So now, not only that, but they also expanded the definition of CFC. If, for purposes of the repatriation tax, 15.5%, if beforehand a CFC meant there must be over 50% American ownership, now they said yes, that's one kind of CFC. The other kind of CFC is any foreign corporation with at least one US shareholder, which is a corporation. Okay? So, just imagine, now this is an Israeli corporation, and we'll take two examples. Moshe, who you understand is an Israeli, we'll call him, I mean, not an American, and he has a chain of falafel stands. Okay? For the people, yes, I know it's stereotypical for the people watching, but it makes the point. Okay? And his uncle invested $1,000, or a corporation, his uncle, through a corporation, invested $100 into that business. Okay? Or a startup based in Israel gets an investment from a US corporation. Not implausible at all. This means that now all the earnings and profit, if this happened before December 31st, 2017, this company now is become with it could be 1%. This US corporation going 1%, and it's subject to the same repatriation tax. I think you understand the implications globally of what this means. The scenario is not only impacting Americans overseas, like me or business people, but now an Israeli startup with an investment from one US corporation. And this is happening globally. I mean, we are talking about Israel. We're here in Israel. But I think you can understand the problem associated with this law. Okay? And the result, as I said, that every U.S. corporate or individual shareholder, meaning if it's Google and it's Google Sub, or if it's Monty, a personal individual holding, like a lawyer, like I am, you're on the hook for it. And the implications are pretty severe, as Larry will get into this. 17.5%. I know we've all heard 15.5%. It's not 15.5%. It's 15.5% for Google. For us, it's much more. We're worse than Google. We're abusers, and we're guilty of the worst crimes that we are not living in America. Guilty. Okay? And for non-cash, it's 905, and Larry will explain this in a few secs. So, and it's 8 for corporations like Google. So not only were we not intended to be the target of this law, but we're much worse off than Google and Apple, who have the best lawyers in the world, and who have a lot of money in the bank, and who get lower rates. And we haven't talked about GILTI yet, which is far more draconian. We'll talk about it briefly, because GILTI is much more complex, and it's every year going forward. The repatriation tax ends December 31st with the situation, I mean the payments you make afterwards. But GILTI starts January 1st and goes on every year. And it is the most draconian thing. We'll explain it briefly, and you'll understand that it is truly insane. And therefore, that something has to be done. So I'm going to just cross. So as I said, while corporations pay, Larry, I stole your slide just for a second. While corporations pay 15, we pay 17.5, 8, 9. Larry, you'll get into the payments and all that, so I don't have to. Okay? So the key issues, and here I'm approaching, I think, the last slide or two, is that okay, now in terms of key issues regarding this tax, you have a highly complicated deduction scenario where you can take deductions to offset the income. I personally have read it 10 times. I can't make it out. I can't. It's very complicated to understand how that works. There's many restrictions on tax credits. Okay, so basically what it means is I have to now, as Larry will say, file my return either April 15th or June 15th and include all the earnings and profits in my tax return. Okay, and there's an 8-year payment plan. So I have to pay these taxes. Israel's not going to give me a tax credit on this because I live here and Israel has the first right to tax its own corporation. They're not going to give credits for what America is crazy enough to charge. They'll say, no, you pay taxes here on your corporate profits and you go figure out in America what you're going to do to offset that credit, to offset that tax. And there are solutions in some cases not. And so it's a crazy tax. I mean, there's really very little to say because you all are going to have to make a decision very quickly as to what you're going to do. And as much as I hate the word compliance, I prefer fight and petitions and changing things. But even me, you have to make a decision. If you don't make that first payment on the April 15th or June 15th deadline, the entire amount that you owe, the first payment is 8% of the tax. If you don't make that payment on time, the entire amount is accelerated and you owe all of it. So what are you to do? You can hide beneath like an ostrich and do nothing. But if you've been filing year after year 5471, the IRS knows you have this corporation. And if they decide to pursue you, all they have to do is take that last year's 5471, multiply, do the math, and send you a notice of deficiency, or a letter in the mail. It's pretty easy to catch you because we've all been filing these 5471s. You can't hide that, what you've already filed. Okay? The last issue is the issue of GILTI. Basically, GILTI is much worse than the repatriation tax because it's every year. And this is what it says. Let me just take the law. I have the law here somewhere. Okay. Yeah, okay. So here is the law, GILTI, section 951A, I believe. Yeah. So GILTI is basically, even though it stands for Global Intangible Low Taxed Income. What they were trying to get at is, again, income that Google was shifting into Ireland by use of patents and licensing and all that. Okay? Mahakeshev. What connection do I have to intangible income and licensing and patents and what does Monty's little small business have to do with that? Okay? But now for the accountants among us, this is how GILTI is defined, GILTI income. It is gross revenue, so the amount you sell. Write this down because I think it's worthwhile just to understand what we're talking about here. It's gross income of the corporation minus COGS, cost of goods sold. For me, lawyer, I have no COGS. I have a computer. No, I don't have any COGS. I'm not a factory. Minus 10% depreciation on your tangible assets, the table in the office. Okay, I can depreciate that 10%. Minus appropriate expenses. Kid you not. So wait a second. Appropriate expenses. The result, what is left after that, gross revenue, minus COGS, minus 10% depreciation, minus appropriate deductions, which who knows what that means. And if you read the article that Baker and I wrote, he himself says, what does that mean? I mean, if I'm a lawyer or if I'm if I'm nuclear power plant. I mean, there's no regulations on this. There's nothing, no guidance. So, but the balance is GILTI income. Now, I know Monty, I have no COGS, no depreciation. So, am I going to be guilty now for the rest of my life and paying 37% tax on this? On my GILTI income every year? And here there is no tax credits for individuals. Google and Apple, they get tax credits and deductions. Okay? And it is calculated that unless that if they're in a jurisdiction, let's say Israel, if they're in a jurisdiction where the income tax is less than 13%, they won't have to pay GILTI because they have all these deductions. I don't have it. An individual does not have tax credits or deductions for this GILTI income that Monty has. So, is this insane or what? The only way to explain this is that it wasn't intended. And if you call the Ways and Means Committee and you call the IRS and you talk to Mr. Talisman, a top lobbyist, a Jewish guy I met in Haifa a week and a half ago. Thank you very much, John, for your help. It was unintended. There's no doubt about it. It wasn't intended. And it's just another example of how expats like us are caught up in these tax wars between the very large corporations who are abusing and rich people who are hiding bank accounts and us ordinary people that are just working hard to support a family and we happen to live abroad. So without a doubt, it is insane. This GILTI is much worse than the repatriation tax because, as I said, it's ongoing. And what is appropriate expenses? How is my accountant? How are you going to answer your clients who ask them, who ask you, what is appropriate expenses for GILTI purposes? And you'll say, I don't know, I'll call Monty. Because there's no regulation, and there won't be a regulation, and then is there going to be a regulation per industry, per shoe store, per whatever? No one knows. So you'll say to your client, like I say, I don't know. Like Baker McKenzie says, don't know. We don't know. So, and it'll only be known in years. All I do know is corporations like Google get tax credits, and we do not. So, to conclude, very bad wake-up call. I think several of us, up until, at least I know, until that thing came on Financial Times, I think I even sent a newsletter. There was really not much in the tax reform that impacted us. The estate tax, of course, went up, but I don't have 10 million bucks yet. I will one day, hopefully. Investing in real estate didn't change much for Israelis. There wasn't huge amounts of stuff that really impacted, but then when this hit, then you really realize that, boy, this is a bomba, as we say in Hebrew. So it's a bad wake-up call for expats, and this is after years of having to deal with FATCA and FBAR and taxation on pensions and PIFIC and every regime under the world that was aimed to tax rich people in America and corporations, not us. But we're dealing with this again and again, and people around the world, Americans, are sick and tired of this. Sick and tired. And I think today at 6 o'clock, we'll hear some people calling in from abroad on the phone, from Israel as well, and you will hear that who we're talking with, these people are sick of this situation enough. So the solutions, yes, there are some solutions in certain cases. We're not going to get into them today. I'd be happy to take you can call me if you need requests. But in terms of compliance, again, I hate the word compliance where it's unjust, and I prefer petition and fight. But here, if you don't pay on the 15th of April or June, you're on the hook for the entire amount. And so what are you to do? I'd have to say that you got to comply. I just don't see another alternative. You can fight it, and it's 8 years, and hopefully by the end of the year or whatever, we'll have the petition and work will have helped. But I don't know.
Question.
Yeah.
What about the clauses in the tax treaty?
Huh?
The clauses in the tax treaty which say they cover taxes that will be passed in the future. Is the U.S. tax treaty?
Yeah. So the rule.
To cover taxes.
No, the rule in America is last in time, first in right, meaning things which are enacted after a treaty take precedence over the treaty.
But the treaty says otherwise.
That's the rule of the law of the land in America. That first,
The law contradicts the tax treaty. The tax treaty says the opposite.
this has been litigated in a wide variety of, basically a treaty and a law are, you have the Constitution, you have federal law, and you have treaties. The treaty and the law are the same weight. So just like in any other law, the last in time supersedes the earlier in time. Okay? So the last thing is tax advocacy, and I love imagery, I just love symbolism, because with a word or two words you can convey exactly what you mean, and I think we all understand. When you use a word like Boston Tea Party, which was taxation without representation, when Americans said enough, you can't tax us without representation. True, some of us vote, but it is our right to impact the U.S. is so minuscule, and the hardships they're imposing on us are so significant that this is the Boston Tea Party. It's taxation withoout representation, and Americans around the world are sick and tired of this. And we say in Hebrew, "Higi hazman la'asot ma'aseh," and I really do believe that this will come out of Israel, and I believe relatively quickly we'll get relief from the IRS, because I just see what's happening around the world with the people here and people abroad, and I think I'll end on that note. But again, I will be standing in that door, and I'm not joking. And whoever hasn't signed a petition yet, will hand over a petition to me, because we are going to make a difference. And your clients, if you can sign this petition and get them to sign that petition, okay, we will make a difference. And it's 2 minutes of your time, and it saves us a huge amount of hassle. Okay, so that's what I want to say. Whoever wants to stay behind at 6 o'clock and with a few of the others and whatever, and get involved, happy to. That's it. Questions?